In this video, we're going to look at using tax schedules. And one thing to know about tax schedules is that they use brackets. So each line is considered a bracket. So for example, this first line would be the 10% bracket. The next line would be the 15% bracket, and so forth. So in this example, Maria and Don are married taxpayers filing a joint return. Their combined taxable income is $153,900. The IRS offers a tax schedule so that taxpayers can calculate their tax. Use the tax schedule below for married taxpayers filing jointly to calculate Maria and Don's tax. So first thing, let's figure out where they fall on this tax table. And looking at this tax table, $153,900, it has to be over the left amount, but not over the right amount. So we're looking at where $153,000 falls between $131,450 and $200,300. So this tax table really is split in two. The first two columns are used to figure out which bracket to look at. The second two columns tell you how to calculate the tax. So we're looking at the second line right here for calculating the tax. First, let's write their taxable income in interval notation. So in this case, the tax has to be over this amount. Okay, so that means we want to put our X here in the middle. It has to be X has to be over that amount, so it's not equal to it. But it says, but not over. So that means the X needs to be less than or equal to the 200,300. So that is how we would write our interval notation. 131,450 is less than X, which is less than or equal to 200,300. To calculate the tax, you will notice it reads 25,550 plus 28%, and this is where you need to pay attention, is it's of the amount over. So it's 28% of the amount over that. So what you're going to do is it's going to be X minus the of the over amount. So when you write your equation out, it's going to be tax is 25,550 plus 28%. Remember to write that in decimal notation, parentheses X minus 131,450. So remember, X, we're letting X equal the taxable income. So this is their combined income. So now all we have to do is take their taxable income of $153,900 and plug it into our equation. And then you just solve it like you would any normal equation, and you end up with 31,836. So Maria and Don's tax is $31,836. So we're going to use the given tax schedule to determine what taxable income would yield a tax of exactly $8,962.50. So first off, if we look at this tax table, we know that for the tax amount, we're looking on the right side. And you will notice this number on the left in front of the percent in each bracket. What this number represents This number represents tax from all of the previous brackets. So in this case, $8,962.50 is the tax from both the 10% and the 15% brackets combined together. So what that tells us is the 25% bracket shows a base of $8,962.50. There is no additional amount over $65,100. Therefore, the income is $65,100. And a way we can prove this and test this out is we can take the 15% bracket, write the equation out, and set it equal to $8,962.50. And then we can solve for x algebraically. So you would first distribute like you normally would, and then you would combine your like terms, and then you would continue on and solve for x, and you will notice that we end up with the result of 65,100, which is what we had stated based on that. And looking at our tax schedule, 65,100 is the top amount from the 15% tax bracket.